much time do I have? Okay, I'll be there. Bye.
Hello? Yeah? Uh-huh. Uh-huh. Yes, yes. Okay, I'll be there.
You used to call me on my cell phone.
Now?
I'm really busy. I can't, sir.
I need some sleep. You can't.
LG Electronics Incorporated is a South Korea-based manufacturer founded in 1958 with headquarters in Seoul. As most of the big companies, LG's main source of finance are its shareholders' equity and liabilities. The amount of total liabilities is almost double the amount of shareholders' equity. That means that the leverage ratio is relatively high and the company is vulnerable. During the last 5 years, LG's share prices had some rises, mainly because of releases of new models on the market and good sales in all divisions. But LG also faced some share prices falls due to competitors' good performance, stock market fall in 2011, and the decision to close its plasma TV unit. In 2015, the share price is still low compared to the one of 2011, but it has risen from its lowest point in August. In 2010, LG Electronics scored a net loss of almost $100 million. That's why the EPS of this year is negative. The reason behind this was the poor performance of the company on the fast-growing mobile market compared to its competitors. The EPS from 2010 until now is still negative, but slowly marking less loss per share. As you know, low DPS not always indicates poor performance. It may mean reinvestment into core business assets, and in the long run, it can produce higher DPS. Such is the case with LG Electronics, which is currently investing more of its profit into its mobile department in order to face tough competition in the sector. When the quick ratio is less than 1, that means that the company cannot fully pay its current liabilities, as is the current situation with LG. One of the reasons is the almost double amount of liabilities compared to equity. But when talking of corporate social responsibility, LG Electronics can take pride with a lot of campaigns, such as Global Blood Donation Campaign and Green 2020.
HTC Corporation is a manufacturer of smartphones and tablets. It operates in the technology sector, and it was founded in 1997. One of the founders and the current CEO is a woman called Sher Wang. For the past 5 years, the data shows that the majority of its financing the company receives through its retained earnings. For the past 2 years, the total equity has increased, and the balance at the end of 2014 was way more than it was at the start of 2013. This is a good sign considering the fact that the company was at huge loss in 2013. Another positive thing for HC is the fact that they didn't have any long-term debts except for one in 2010. From the graph of the shares, you can clearly see that there is some constant rise in the beginning and middle of 2011, and there is a peak reached at approximately $38. The company was even announced Device Manufacturer of the Year in 2011. Currently, however, the company is what investors call worthless. This means that in theory the company will be paying you if you acquire all the shares. The quick ratio for the past 5 years is barely above 1. Moreover, for 2 of the years it's below the 1 line, which means that they did not have enough quick assets to pay all their current liabilities. This is due to the fact that in these years HTC had a lower total current assets. The EPS in 2010 were about 46 new Taiwan dollars. As net profit gradually increased during the next year, earnings per share also increased. After the period of company's profit decreased several times, and in 2013 the company was at loss, meaning that the earnings per share were negative. From 2010 to 2012, the profit of the company was rising, and alongside the dividends per share were rising as well. Since HTC was at loss in 2013, the dividends per share sank from 40 to 2 new Taiwanese dollars, and the company did not pay any dividends in 2014.
Apple Incorporated is a multinational technology company that specializes in mobile communication, media devices and software products, design and development. Current CEO is Timothy Cook. According to the Statement of Financial Position, for 2015, Apple's total liabilities are greater than its total equity. This suggests that Apple Incorporated's dependence and role of debt is high and it progressives. However, the company's current position in the industry and its frequent manufacture of new products promises a high return on investment. Over the last 5 years, its revenue has grown at a compounded annual rate of 29.1% and it has reported a net margin profit of 21.8% in the Q4 period of the fiscal year of 2015. The company has shown steady growth in the stock market, whereas the peaks are mainly due to the release of new products. As we can see from the graph, Apple's current quick ratio has deteriorated compared to the year of 2010. This indicates the company's ability to meet short-term goals with its liquid assets has deteriorated. Apple Incorporated's average earnings per share growth rate in the last 10 years has been following the annual rate of 47.10%. This demonstrates the increase of the company's capability of generating significant dividends for investors throughout the 10-year period. Apple Incorporated's average dividends per share growth rate per year for the last 3 years has been 73.50% and indicates that the company's efforts to give out more dividends and its financial performance is going well. Compared to the competitor Microsoft, Apple is successfully maintaining to attract investors with its higher than ever average dividends. Apple uses renewable energy to supply its offices so to reduce the pollution from their devices and online services. The company also alters product materials to increase their recyclability and offers free recycling of used products.
Hello, sir. I heard that you are looking for a company to invest in, and I saw people from Apple, HTC, and LG outside. But I'm here on behalf of Samsung Electronics Corporation. This is the biggest electronics company in the world. For more than 20 years, the company has kept the title of world's largest memory chip maker. Our total equity for the last year is more than $160 million. Samsung in that way is way better than Apple and the others. Revenue for the last 5 years is almost $200 million. The company has earnings per share of $145. This shows an increase with more than 1.5 times over the last 5 years. But of course, for investors like you, the most important ratio is how much we pay in dividends per share. And for the last 5 years, we increased the paid dividends more than 4 times. Last year, the company has paid $19 per share, which is around 20 times more than the other companies, which you have presented already. In Samsung, one of the most important things is our social and environmental responsibility. We are part of numerous campaigns, like preserving the nature and helping education in poor regions. The motto of the company is Inspire the World, Create the Future. I believe that you would be one perfect partner for us in our mission to create a better future. Guys, go home. I got this.
It's the motherfucking Eagle Double G.
Snoop Dogg.
You know I'm mobbing with the D.R.E.